Hey everyone, in this episode I'll be talking through the cheapest properties, the cheapest houses, the cheapest suburbs that you can invest in Australia right now. So if you're thinking I need 40, 50, 60, $70,000 to invest in property, you actually don't. You really just need 30,000. I've helped so many clients with even little as $25,000 invest in property. So if you don't have that much money, or if you do but want to diversify, split your resources up, this video will give you a ton of value. My name's PK and I help people build passive income by buying properties that have a combination of both growth and positive cash flow. And this channel exists to help you get ahead through data in the Australian real estate market without using a buyer's agent. Okay, so this data is InvestStar. Let's go through it, and I'm going to be deep diving a particular suburb where we bought property, where you can still buy property, where we made a bunch of money. Okay, but let's go through this list first. So here it is. This is the suburb. This is the state, postcode, dwelling type, number of bedrooms, and their median price. So I'm just going to go straight to the house ones, and then I'll go to the suburb and do a deep dive of where we were buying so you can assess, and I'll give you some of the rationale. So the first one is Broken Hill, New South Wales. So this is quite a rural area, but 2-bedders are about 120,000. 3-bedders in Broken Hill, a little bit more than that, but you're still looking at sub $200,000. Then you're looking at Charleville in Queensland, and by no means am I saying that you need to go ahead and buy in these areas, but I'm just trying to demonstrate that you can actually buy $125,000 properties, and they may do well depending on the data. There is no correlation or relationship between how expensive a property is and the percentage capital growth it gives you. Okay, there's no relationship, whereas there is a relationship between how expensive a property is and generally the yield. Generally, properties that are cheaper give higher yield, but that doesn't mean that they don't perform as well on a percentage capital growth perspective. So that's really the sweet spot. If you're a property investor, in general, this is generalization, exceptions exist. I recommend buying properties sub 500, sub $600,000. But here we see that if you get an 80, 90% loan, you can get into these types of suburbs for as little as literally $15,000 in the bank. All right, so let's carry on. The next one is Wellington in New South Wales. The data is actually improving for this one, so a little bit of a tip. I wouldn't say to go invest in there right now, but it's definitely improving. Port Pirie in regional SA, that's, once again, the data is improving. I wouldn't say it's investment worthy, but it's improving. I'll get to our secret suburb in a second. Then you've got Rangeway in WA. I have no idea anything about that, but for what it's worth, here are the cheapest suburbs. Next house is Kambalda West. Lots of Western Australian locations are so affordable compared to their Queensland, New South Wales, Victorian SA counterparts. So look out for them, right? The next one that I'll talk about, Port Augusta. Now, a lot of you talk to me and ask me, is Port Augusta something that we're investing in, that you should invest in? My answer is still no, right? It's not quite top 5 percentile suburbs, which is really where I like to invest in. So I would give it a no. Zeehan, this is in Tassie. It has done really well, and it is a house. But here's the thing. Here's the suburb that I really, really want to deep dive into, because I'll tell you right now, this is where we were buying in late last year. It's in Tasmania. It's on the west area, or the western part of Tasmania, regional area. And let's switch over and go through why right now. So what I really love about Queenstown in Tasmania, so for those of you who don't know where that is, let's check it out. And if you're a client of mine and you bought here, well done, good on you. Thank you for trusting the data. So at Tassie, you'd be like, hey PK, why am I buying in random locations like this? Actually, it's a tourist spot. It's got a highway. You can see this red, the highway connecting here, the yellow line. Really, really good area. This whole part of Tassie has just boomed, Burnie and all around it. There's not much supply, even though you're like thinking it's a regional area. There's actually not that much supply, national park and other things like that. But let's look at the data, because ultimately what I say is meaningless. Let's look at the data. So, median value for Tasmania, Queenstown suburb, right? Not in New Zealand, but in Tasmania. So this is where we started investing in. And, of course, you'll be like, well, of course you'd say that, PK, because that's just when it started to blow up late last year. But I'll take you through some at least. These are not necessarily the exact websites that we use for all the data, right? But I thought to give you some that you could look at yourself through the public domain. But I'll give you the rationale. So, but first of all, here it is. So you could have bought a house here, a house, not a unit or townhouse, a house for $100,000 late last year, let's say September, October last year, this time last year. And in that time, it's risen by $60,000. Actually, the starter's a little bit old. It's more like $180,000, $200,000 these days. But let's just say $80,000 off a base of $100,000. That's that's like 2x the return in a year's time. So I know what you're thinking. You're like, well, it's not actually that much money, but on a percentage basis, it's 100% growth. So I know everyone talks about cryptocurrency and Bitcoin, how you can go to the moon, right? If you had invested here, you bought a $100,000 property late last year, you would have needed about $10 to $15, maybe $20,000 to close that transaction. Let's just say $20,000, $25,000 to be conservative, right? $25,000. That $20,000 or $25,000 has now become $200,000. It's an 8x return. Now, if you invested in cryptocurrency in September last year, I don't know, I'm not an expert, I know nothing about crypto, you probably would have made a lot of money, but the risk on the crypto versus this, I mean, it's chalk and cheese, right? Let's go through the median rent. This is the other story. And this is why we started investing here in around August, September, October of 2020. You can see that the median rent, where it has been fairly flat around 140 for the preceding 7-8 years, had really started to go up. So we like to see rent increasing, because rent increasing is often a precursor, not all the time, but often a precursor of capital growth. I talked about that in my last video where we went through the highest rental growth increase suburbs across Australia. I'll link it at the end. Okay, so that's one of the reasons why it kind of came up on our radar. We started thinking about it. Right, so, and check out the rental yield. All right, so even if it hadn't grown, I mean, you're making so much money, it's not funny. You were making above 10%, 12.5% yield, to be exact. Now, this is like even higher than commercial yield standards, albeit, it's a cheap properties, it's not like $1 million, but still the yield is pretty fantastic. The risk is so low. So many of my clients, well, I wouldn't say so many actually, those with the requisite risk appetite who wanted a short-term, either a short-term flip, hold it for a few years, do a slight reno. There's a big disparity between renovated and unrenovated properties in the suburbs. You could do a quick cosmetic reno, maybe 5,000-10,000, increase the valuation by another 40,000-50,000. That was a strategy that was very common for clients, or for those who had a little bit of a higher risk appetite, they're just going to keep it forever. And much like Bernie, which I just demonstrated, this has doubled in value in the last 4 years. This has also doubled in value literally in the last year, but they're just going to, it's positive cash flow, it's growing, it doesn't take up much of their capital. They sunk $20,000 to $25,000 to begin with. It just makes sense, right? I mean, all the data was going for it. Let's have a look also at SQM, and I just want to demonstrate vacancy rates, right? So this is for Queenstown. The postcode here is 7467. So you're probably thinking, hey, this is a regional town, not going to be able to find a tenant. Of course, people in Sydney and Melbourne, they have this tendency, maybe that's you, that, I should only buy in Sydney, Melbourne, or maybe Brisbane, because that's where rents or renters are easier to find. Check it out. So yes, this place did have a problem, right? Around 2015 of vacancy, 15% vacancy rate. That's huge. And keep in mind, it's not like Sydney's never had a 15% vacancy rate, or parts of Sydney like Penrith, right? Same with Brisbane. Parts of Brisbane, like Logan, have also had huge vacancy rates, right? Ipswich, and even in Melbourne, and places like Western Melbourne, Melton, Frankston, those have been existing, lack of rental appetite. All suburbs around Australia, all cities go through these cycles. But what really attracted us late last year, let's say around this point, where are we? When we invested around this point, was that vacancy rates had come down so much and were holding their own. So it wasn't like they were coming down, then like a ball, they were going to bounce back up, but they held their own. They became sticky, incredibly strong. There's a lack of rental supply in this market, and that's just another thing that, attracted us so much to buying in this area, and it's continued to stay really, really strong. And let's check out like a property. Now, I mean, this isn't a property that we bought, but I just went on real estate, went in the sold section and saw like a nice typical type property that was sold. So I just want to illustrate that we're not talking like a shack, okay? We're not talking like some sort of, you know, random place. Sorry about the Virgin ad, by the way. We're not talking about a hole, right? Let's just go through this. I mean, it's, you and I may or may not want to live here, but it's a perfectly, you know, good enough place for other people to want to live here. And that's what the data demonstrates. Now, don't get me wrong. It's not like we just look at 2 or 3 data points and Bob's your uncle. We looked at about 30 data points for this suburb before we went ahead, and then we isolated the right streets, right types of dwellings, just like this one. But I mean, nice enough place, right? It's a safe area. I mean, there's nothing wrong with this. And as a property investor, I just want you guys to understand, just because you don't want to live in your investment property, that doesn't mean there's no demand for it, okay? You're not the average person necessarily in that suburb that will demand to rent that investment property. So rely on the numbers. Huge block of land on this one. I mean, standard, just a great property. So the moral of the story really is, guys, use data. I went through the top 15 cheapest areas. That data is Investor. You can get that report yourself as well. Cheap doesn't mean always good, but in this case, we found this suburb. We didn't go in looking at a report like I just shared with you. We used our own system. We looked at 35 factors, found a place like Queenstown, doubled in value. You only needed $20,000 to get in. You would have made $180,000 in the last 12 months with a 12.5% yield, which is now, you know, even higher if you'd bought back then, because rents have risen since then as well. So just good news story. You could have renovated, made more money, refinanced a few times. So this is Queenstown. This is, you know, a left-wing property investing. You can either invest right here, or you can either invest right here, and it will cost you tens of thousands of dollars to hold a property or a property portfolio. Even here these days, it's not so easy. Or you can look at all 15,000 suburbs across Australia and find those that are sub $500,000, positive cash flow, high growth, with reno potential if that's what you want. Try to get them at $20,000, $30,000 discount off market. That is high performance property investing. Guys, if that brought you value, hit subscribe, hit the like button, turn the notification bell on, up your learning. I'll leave links below to my Facebook group, 10,000 investors and clients in there. Check out the podcast, iTunes, Spotify, Google Podcast, Stitcher, links below, and also the website. Get educated, get educated, get educated. Tell me, do you want more videos like this one where I tell you exact suburbs where we invested in? You can still invest there, by the way, but the money to be made, the majority of it, I dare say, has been made. You can still invest it. It will still go up looking at the data. The data hasn't calmed down at all. It's still very strong, but you want to buy at the bottom of the market, just like my clients did. My name's PK, and tell me if you want more videos like this, leave a yes below. Thanks so much, guys. Catch you later.